Welcome to the Big Biz Show. Taking care of business. You want fast-talking, hard-hitting discussions on business and finance? Maybe with a barroom slant and some really salty peanuts? We're not counting calories. We're counting cash. Before we get to the man with the financial plan, meet the money team. Costa, Mary, and Greg. Now Captain Finance himself, Sully.
Welcome to another edition of the Big Biz Show. Wherever you're watching, wherever you're listening, we certainly appreciate you being along for the ride. Costa, Marybird Godwin. Our executive producer is Greg Todorov.
And howdy to you.
And a big old howdy to you.
Of course.
And before we go any further, please, let's recognize three of the best in the business, the Day Trader Trio.
Well, thank you very much.
Wow. Sully, how are you?
Tracy's getting lippy.
I love it.
He's got a mouth and he likes to run it. Yeah, you do.
Put me in the best mode.
Can you demonstrate that for a minute for me, please?
Oh, awesome.
Ready?
Absolutely.
Let's go.
Ladies and gentlemen, I have a mouth and I like to run it. I get a little lippy. Okay, sure. All right, ladies and gentlemen, welcome to this middleman's entries and articles. His honors made honorable observations for mass production, mass consumption of fly school graduate ready for class destruction. Welcome to the Big Biz Show with his flows coming from the top of the bro's mind. It goes on time. One after the other, sisters and brothers, listen up to this in your transistors, in your podcast, or your iMacs, or I'm on the screen and it's coming clean off of the beat.
Ladies and gentlemen,
And the microphone is passed to Mike Costa. Collaborations while you wait. He was on key too.
Was he though?
Was that little James Osborne?
Oh my God.
I got little James Osborne from
Little bit.
there.
Yeah, I never know what's going to come out.
Or was Anita Baker?
I love Anita Baker.
Well, because you like Michael McDonald. So
Yeah,
that's
1,000%.
Michael McCosta. That was James.
Score.
Remember Mike Costa College? Do we still have the graphic for Mike Costa?
We are churning out students left and right.
My daughter might need to go there.
We
So,
need-
got an application?
Well, Mike's taking deposit checks right now.
Oh, okay.
Exactly.
If we could find the Mike Costa College graphic,
Sure.
that would be great. Because I think we should do a segment from Mike Costa College, maybe once a week or something like that.
Hey, try to help the kids of today become the adults of tomorrow.
Speaking
I'm all
of
about
kids
it.
of today, here's Howie Font, ladies and there it is. Mike Costa College. Looks awfully familiar. Looks like a local place called Mira Costa College.
No,
But no, it's
not
Mike
at all.
Costa College.
Completely different.
Oh, here he is. So Howie Font is, speaking of kids, Howie Font should be with us in a second. There he is. Well, I'll tell you, interested in talking to Howie about the difference between a correction and a there's three, right, Howie? There's a correction, Howie, and then what else? We got a correction. What's the other one, Howie?
Well, no, I mean, correction is what's happening
Yeah,
today.
but there's another one though. There's a correction, and then there's a crash. Right? Is that what it's called? What is wait? This is a serious question, yet, Jack. What is 10% from a previous high?
Well, yeah, when you talk about from a yearly high or from a 52-week high is what we use as the metric. You come down 10 or 20%, you have a correction, and then you have a deep correction.
And then then there's a bear market, right? A bear market is something.
that would be bear market territory.
So correction is when a stock drops 10% or more from its 52-week high. Okay, S&P is now at 55, 56 from an all-time high of 61. So since February 19th, how many? Do you guys know what market cap is? The market cap of a company, okay, is the number of outstanding shares times the share price. Okay, you have 100 shares, $5 a share. Company's worth $500.
Okay.
It's basically a way of saying what the company's worth.
Okay.
Is an outstanding share what I own of the company? No.
What the company puts out there. Outstanding shares are how many shares are available. Okay.
Oh,
you got stuff in the float.
Okay,
I'm going to tell you, if you think in terms of market cap, gained or lost, a bunch of market cap gains means a lot of companies increased in value. We come back, Howie's going to tell you how much market cap was lost in value on the S&P since February 19th. We're talking about less than 4 weeks. Big Biz Show, back with Howie Font, our puncturepreneur, in just 1 second.
Biz Show rolls on in over 175 countries. All the ships at sea on the American Forces Network. As always, we appreciate what the men and women of the United States Armed Forces are doing, what they've done for us. Costin, Mary Bird Godwin, Greg Todorov, and of course, Sully.
And Howie Font is with us. So Howie, we talked about market cap being a valuation of a company. Mm-hmm. So if you have an increase in market cap, companies increase in value. Mm-hmm. It's another way of evaluating a company. Sometimes it's accurate, sometimes it's not, but it is what it is. You know, when you've got low share price times outstanding shares, it means the company's worth less. Howie, how much market cap has the S&P 500 in total lost since middle of February?
Yeah, so just since February 19th, it's been $5 trillion in overall, and in the whole economy's market cap, so to speak.
All right, we're bringing it down. That's what Trump said he was going to do.
I was going to say, didn't Elon Musk say that, I don't remember if it was December or January, he said it's going to get worse before it gets
because
better.
we were top heavy. The market was really top heavy in terms of, look, at some point, what's up, Al?
Let me just say, we've taken all of the post-election gains off the table. So we had the market that we had. There was a big run-up, and now that governing is starting to happen, you see all of that going away.
But keep in mind, this is strategic in my mind, because if you look and see where the market was last January to where it is now, we're still in a great spot compared to a year ago.
Oh, really?
It's true. We've had two 20% plus years in the market, so not discounting that at all. The market does on average go up 10% though, and you know, there is this concept of mean reversion, and we should expect probably not a 20% year this year.
So my daughter Delaney, who is not in the financial business, and she's, you know, like many kids these days, I mean, she's almost 30. That's a kid. That tells you how old we are. but I always use this analogy that we were not, in our age group, politically aware when we were in college, much like the kids are now. The kids these days, and of course, financially. I got stock when I worked at Price Club, which is now called Costco, which helped me buy my first house. I learned about the stock market because of that. My daughter Delaney says, hey, should I buy stock now since the market crashed? I said, no, because just because something is cheap doesn't mean it's not going to get cheaper. The trend is your friend in this, okay? You cannot time the top or the bottom of the market. You've got to use the trend up and the trend down in terms of buying and shorting and so on and so forth, and you should be a buy and holder here. Howie, I believe this is strategic for a number of reasons. Because Donald Trump did this last time. I believe Donald Trump has two missions here. Number one, he is resolute in his values on what he really wants to accomplish. But this guy is smooth as a gravy sandwich, and he's dumb as a fox. This guy knows exactly, by dropping the market down, using tariffs, another 50% on steel in Canada this morning, he knows exactly what's going to happen. And he'll do it at he'll do it at the perfect time. When he removes the tariffs off the table, you know what's going to happen with the market. The minute there's a whisper that these tariffs are going the other direction, he's going to look like a hero. And he knows, and listen, and don't you believe that's not part of it? Howie?
Listen, I would just say that what tariffs, no tariffs, whatever the policy is going to be, you know, what the market really hates is not knowing. So I think you're right that there will be a lift when certainty is achieved, but you have to also give the appearance of credibility and not leaving this miasma over the market saying, you know, anything could happen at any time for the next 4 years. You want to say, I am fighting for this win. I want this. I'm going to be a wild, crazy, art of the deal negotiator. And as soon as I get it, we will have peace on earth with our neighbors to the north.
Hey, right. No, it's true. And I think, yeah, in the meantime, our knickers, not our neighbors, are going to be south during this process. Now, having said that, when I say just because something's cheap doesn't mean it's not going to get cheaper. We are in an oversold condition right now. So when you get whipsaw action in the stock market, okay, overbought, oversold, overbought, oversold, there is a case to be said for mitigating your risk, and that is caused by shorting stocks. I would argue, Howie, that again, if the trend is your friend, in other words, when you see oil prices going down, you could look at an exchange-traded fund like USO and short that stock. If you see gold prices going up, you could actually buy that stock because the trend is your friend if you're doing individual stocks. But what shorting means is this. When you buy a share of stock, the most you could lose is the amount of money that you paid for that share of stock. So Mary's makeup line is $100 a share. I'm going to buy one share. I've got $100 I'm investing. Hope it's going to be 101. Hope it's going to be 200. But the most I could lose is $100, right? Because if it goes to zero, lose. Okay. Now, if Mary's cosmetic company now goes from 100 down to 80, and then she gave me some bad earnings. Now we got tariffs on makeup coming in. This stock is dropping down like a Dick Cheney's hunting partner. Thank you very much. You can't sell your house before you own it. You can't sell your car before you own it. But you can sell securities. You can sell stock. I can sell a share of her stock before I own it. And let me tell you how it works. I'm going to go to the broker. Greg, I know I don't own Mary's Cosmetic Company, stock symbol MERY. I'd like to sell a share of her stock. That's fine, Sully. Here's your $100. Okay, so let's say it says $100. I shorted $100. By the way, we got to settle this trade in a couple days. Now, what happens if that stock goes to 80? I just buy the share back at 80.
Pretty much.
How much money did I make? $20.
$20, that's right.
See what I'm saying here? I borrowed the shares, sold them, bought them back cheaper, made money. That's how orderly markets work.
Question, sir.
Yes, sir.
What happens, though, when the stock goes...
Well, therein lies the rub, my friend. Because if the most I could lose by buying a share of her stock is $100,
right.
What's the most I could lose if I short a share of her stock? Infinity.
Exactly.
If the stock... so suddenly,
the
Kardashians come in and announce, Mary's Cosmetic line is the greatest in the world. It goes to $10,000 a share.
Whoops.
I got to buy that share back and settle. Howie, is that about how shorts work?
Listen, I couldn't have said it better myself. And yeah, they make it very clear. If you short, you are on the hook for infinite downside potentially.
Now, there is this really interesting thing because some really look at there's been firms in the past that have made a living, and there are still firms that make a living at shorting stocks. They look for stocks that they bet against. Okay, all stocks have a group of investors institutions are going to bet against. Like right now, people are shorting, they're making money shorting. It's like I say, when you see gas prices go up, buy a share of Texaco. If you're paying $5 a gallon, but you buy a share of Texaco and the stock's going up, you're going to make more money in the stock market, okay? You're going to mitigate those losses. Same thing happens with shorting. But there is this kind of fun thing that happens when people are abusive short selling, when they're kind of cheating, and that's called a short squeeze.
Was that the GameStop situation?
Yes,
Years ago?
exactly right.
Hey.
So what happened was hedge funds were shorting, which they should have been. They were mitigating their risk. And activist investors came along and says, and they really didn't understand it, by the way. They thought it was nefarious. It wasn't nefarious. It was just, it's like using the tax code, right?
Yeah.
I mean, Amazon, Target, McDonald's, they don't pay any taxes. Yeah, neither do you. We're using the same tax code. We're avoiding taxes just like everybody else is. They just have more write-offs based upon our progressive tax code. Well, even the fact they didn't understand it didn't make any difference, Howie, right? They just went out, we're going to buy this stock, because what happens when you know hedge funds are shorting and you're activists and you go buy?
Yep.
You're going to lose your shorts. And talk about your knickers being south versus your neighbors to the south and the north. That's what happened. And these hedge funds, once again, Howie, I would argue, to your point in your research, these hedge funds are net short all year. This is a perfect sort of setup for what Mary just brought up, is it not?
It is. I mean, you see a record-breaking amount of put contracts, which is another way to short, just as you explained. And you see the hedge funds that have been short all year. They're typically considered smarter money, or they have some insight that the retail market doesn't. The hedge funds do. So we're seeing signals that there is a big not GameStop levels, but GameStop-esque short squeeze that could be happening in the market. When we see a correction like this, when we have an event like tariff clarification or just good earnings, NVIDIA could do something. I don't know what would trigger it. There's many things that could. You are set up for a possible short squeeze, and therefore a big rally in the general market.
Hey, Howie, real quick, I want you to explain in 30 seconds or less. There's a record number of contracts, 30 million plus, which they're put contracts. Okay.
Yeah.
Puts and calls and options. Can you explain a put contract and a call real quickly for those folks who don't understand it?
Yeah. So a put contract is the right. You are buying the right to sell your stock at a certain price. So people will buy a put contract, then the stock will go down, and you are secure in your holding.
They're betting against. They buy a put contract.
Yes,
they're betting against
short.
the market
Yeah.
or the company, right?
Yeah,
There's a record
that's right.
number of put contracts in the markets right now.
Yeah,
And they're
that's
betting
one of the
against the
reasons
market.
we think there's a short squeeze that could
Howie
be
Font for
happening.
president. Come on, let's get a pat going.
We're going to be billionaires.
See you tomorrow. Wow. He's a
Thanks so
smart guy.
much.
He's a smart fella.
God.
You know, I love when he talks about your knickers to the shore north.
Let him or you?
Well, I thought he was talking about your knickers were down because, you know, you're taking the shorts, so to speak.
Sure.
Well, he was saying neighbors to the north and south because he was talking about tariffs. I just misunderstood him.
We promise we'll keep your shorts up. We'll keep our shorts up. Much more at the Big Biz Show after. We roll on from the Loft 100 Studios. Hope everyone is having a great day. As always, we really appreciate you being along for the ride. That is the Day Trader Trio. Best three in the business, baby. No lessons, self-taught. At the bar, Costa, Marybird Godwin, Greg Todorov, and of course, Sully.
Yep. 125 million TV homes strong, nationwide, coast to coast. Let's not forget, also simulcast on radio and American Forces Network in 175 countries and all the ships at sea. Bloomberg, Elfman, and Shero, 15 million homes.
Hola.
And yes, I told you about some new distribution. Bloomberg EU is finally in the can. We'll be there in 2028. Next month. Who do we have in studio, Greg?
Oh, look who we have.
We have Claude Zdanow. Come on. Now, is it Zdanow? Is it Zdanow? Or is it Claude, can you buy me a vowel? Z is what we like to call him. Michael, would you like to do the introduction, please?
CEO of ONAR Holding Corporation, of course, their ticker symbol ONAR.
You don't want to start. First of all, great to have you in studio.
Thanks for having me.
And thanks for flying the YPO colors, if you know what I mean. I think you do. The last time you were on the air, I got a bunch of email about, and this is interesting about the show that's been on for almost 30 years. We have the highest technical trader that understands moving average, convergence, divergence, stochastic oscillators, relative strength indicators, and they understand everything about the market. We also have Johnny Lunchbucket, some of our military audience, that doesn't know what it means when I say the Dow's up, Dow's down, so on and so forth. What is the Dow? You talked about a holding company. I got those emails last week. What's a holding company? So before we get to your company, the labs, the marketing technology, everything, as a CEO of a public company, what is a holding company top down?
Yeah, look, holding company, just fancy way of saying a business that owns a bunch of other businesses, right? For us, that means specifically technology, marketing-focused businesses, and we're in 3 different sectors, the 2 biggest being digital and healthcare. But it just means we kind of own and operate those businesses within a larger platform, and there's benefits to doing that.
Is this what you and I used to call vertical integration? Where you're buying businesses that help other businesses?
Yeah, well, so that's part of our M&A strategy. Part of the acquisition strategy we're doing is to kind of vertically integrate businesses that we own already. But as a holding company, you might want horizontal integration, right? You might own different businesses where you can cross-sell services. You can have one insurance policy, one shared benefit. So there's a lot of kind of upside in putting those companies together under one roof.
You know, what's interesting is the reason companies go public is really twofold. Actually, threefold. They want to sometimes on an IPO they want to ring the bell. They want to get some cash in the business, but mainly it's for access to capital and for using stock for currency for acquisitions. Meaning that instead of paying cash for an upcoming business or something that you see value in, you can use stock for currency as part of the deal. Once you make that deal, okay, most CEOs are going to go in there and say hello to their best clients in the new company. They're going to cut the fat. And they're going to try to integrate. What's your strategy when you see something because I know this is what you do. I mean, this is your secret sauce.
Yeah, look, it varies business to business, right? I think at the end of the day, yes, you're right. We're using public currency to make those acquisitions, mostly because we believe there's great businesses out there that kind of adding them together with us is going to create more value for them in the long run because hopefully our stock goes up, and so they're trading kind of their equity for stock in what we're doing. And then
so they're believing in you as much as you're believing in them.
Absolutely. Yeah, there's definitely that's there.
I think one of the things we have to talk about is the pipeline before we get to the granular about what you guys do, because I want to spend a couple segments with you today on that. When you look at I'm sure you got guys calling every day about, I mean, you're like a venture firm basically. People are pitching you all the time. What are the key metrics? And I mean, what are the no sale type deals and no way? What are the ones what's the unicorn?
Look, the simple thing is you want businesses that don't want to sell, right? Somebody maybe who's trying to sell, right, is kind of being shopped all around the block and they're looking for their path out. Ideally, you're trying to find businesses that don't need to sell or don't want to sell, right? You want to be able to find that opportunity, that business that's doing a good job running their own company, and where we say, hey, look, we think there's something special about what they do. It aligns with what our focus is, and we think by adding them to our business, we're going to grow, right? And that's really the idea. Everything's about growth for us, and being able to kind of find those right unbanked kind of diamonds in the rough and being able to make strategic acquisitions to bring them into our fold to help grow the business.
Metrics for looking at the businesses, is it a management focus? Is it a revenue focus? Is it a non-debt focus? Is it all the above?
It's an EBITDA focus. So
explain
income, money that the company has left over, right? We take revenue, get rid of expenses, how much money is left over at the end of the day. We're really focused on kind of small to medium-sized businesses doing about $1 to $5 million in EBITDA. So they have to be cash flow positive. We're not just buying businesses for the sake of a hope and a pipe dream, right? That's the kind of first and foremost thing that we look at. And then we look at, okay, what does it look like when we take that business and put it into our infrastructure? Are there additional cost savings? Is there overlap? Is there growth in clients, cross-selling, all those other things that might exist?
As a CEO, and I'll let Mike and Mary get at you in a second here, but as a CEO, and I run a venture fund and a hedge fund and have probably raised $650 million in my personal career for companies. I never understood to this day, as a guy that's been in this business for 35 years, why in the world would you use EBITDA when taxes and interest are real expenses? And it doesn't really give you the picture of what money's left over at the end of the day. And I ask every CEO this. I've asked Larry Ellison this. I've asked Steve Forbes this. I've asked every guy, every captain of industry, the same thing. And is it the same reason why you don't care in a doctor's office? The doctor doesn't care if their scale's accurate. It's just a baseline to compare to. Is it sort of the same thing?
Look, I think the also other variance is EBITDA is unique to each business, right? What our maybe carry forward losses might be and how that might affect your stuff without getting too technical is going to be different business to business. There's, by the way, I'm not an accountant. There's all kinds of things that go into how you address that. So we choose that as a metric that's kind of a baseline that is unique to that business.
Which is a fair answer. I think Larry Ellison said the same thing. He says, look, it's just a comparator that everybody uses. It doesn't matter that interest and taxes are real expenses. Everybody's doing the same thing, so let's just use that as our baseline.
Claude Zdanow, the CEO of ONAR Holding Corporation, ticker symbol is ONAR, actually saw EBITDA on Broadway. It was awesome. How tough is it not to be laying there awake at night going, oh my God, we should be going after this, we should be going after that? Do you have to keep the reins kind of pulled back a lot of the times, or is it?
Yeah,
how does that work?
I think that's it's a good question. There's no shortage of opportunity, right? We probably look at 100 companies before we narrow that down to 25, or then we narrow that down to 5 that we hopefully maybe can get down to 1, right? Okay. That is literally the volume. So it's really, it's making an investment, a bet on which company is going to be the most accretive for us in the long run. And that's, I think, the harder thing. It's not finding the companies, it's really just trying to sort through them.
And you focus on healthcare and also digital marketing?
Yes.
Okay.
So those are our 2 core verticals. We also have a third vertical, which is what we call experiential marketing, which is really how brands come to life in the physical space. It's a small part of our business. But really the tip of the spear, if you will, is our digital marketing business. So simply said, how does somebody get an advertisement anywhere you might see it online in the digital space?
What's interesting is I want to talk about the labs and the marketing technology when we come back from the break. Are you more passionate about the healthcare side, or more passionate about the digital marketing side, or are they all the same? It's like choosing a favorite kid.
Look, I think at the end of the day, every business we own is about how do we drive revenue for middle market companies, right? So there's different expertise, but at the end of the day, it's data and return on investment, and how are we using technology to drive that, right? So for me, the sector specificity isn't so important. It's really, does this business actually drive for the clients we work with?
Yeah, his name?
Claude Zdanow, CEO.
Like I said.
ONAR Holding Corporation. Lots more to come with this gentleman.
You're not lead, you're staying here. We got to talk about
staying here at the bar. Keep it right here on The Big Biz Show. We'll be right back.
Loft 100 Studios, The Big Biz Show, and our affiliates and our hosts are not registered investment advisors or broker-dealers.
Our show hosts make no commitment that the purchase of securities of companies profiled or otherwise mentioned in our programming
are suitable or advisable for any person, or that an investment in such securities will be profitable in general.
Given the nature of the company's profile and the lack of an active trading market for the securities, investing is highly speculative and carries a certain high degree of risk.
We profile selected publicly traded and privately held companies on our program.
Most of these companies that we profile have provided compensation to Loft 100 Studios and its hosts for the profile coverage.
From time to time, we sell shares of the companies profiled in the open market that we receive as compensation for coverage of client companies.
But never sell stocks if we are speaking about interviewing or covering a public company who has paid compensation.
Specific questions on compensation can be obtained by contacting producer at sullyandgroup.com.
Listeners should verify all claims and do their own due diligence before investing in any securities mentioned on this program.
Investing in securities is speculative and carries a high degree of risk.
We encourage our investors to invest carefully and read the investor information available at the websites on the
Securities and Exchange Commission at sec.gov and or the Financial Industry Regulatory Authority, FINRA, at www.finra.org.
I like it.
In over 175 countries, all the ships at sea on the American Forces Network. As always, to the brave men and women of the United States Armed Forces, thank you for what you do, what you've done for us. That is the Day Trader Trio, otherwise known as the DTT, best in the business. We are here as the Big Biz Show rolls on from the Loft 100 Studios at the bar. Costa, Mary, our executive producer is Greg Todorov, and of course, Sully.
I got a question. If you talk about marketing technology, that was not in our lexicon, probably 5 years ago. How do you define marketing technology? And tell us about the business. Tell us what exactly you guys are doing.
Yeah, look, maybe not 20 years ago, but I think, if you think about traditional marketing was, hey, we used to buy a newspaper ad, a magazine ad, right? Nowadays, it's all about how technology helps us be focused, laser focused, to get the advertisement to the right end consumer. That's all it is, right? We're just thinking about how do we do that more efficiently? Just like how ChatGPT can help you write a essay for your kids' homework much easier.
When you and I talked last week, I think it was, about passive advertising, active advertising.
Yeah.
Passive advertising when you're driving home, listening to the carpet cleaning commercial. Active advertising, we used to thumb through a magazine. What do we call the current? Because I always thought, radio, king of all media, that listening to the same carpet cleaning ad for 6 months in a row creates recall and recognition. But you can't ever remember the name of the damn thing. But you can remember Winston tastes good.
Like it should.
Excuse me.
Yeah, see? Right there.
Like a cigarette should, you jack.
That too.
It was very close, though.
Thanks for killing my analogy. But so is the recall and recognition, which is everything in advertising now, is that based upon frequency? Is it based upon passive, active, or is it based upon the fact that, I remember being on TV 25 years ago saying, what do I need a website for? I'm on TV. And suddenly you realize, if you don't use the entire spectrum of what's on the table, you're losing money, right?
Yeah, I think it's a combination of frequency and right place, right time, right? At the end of the day, average person takes 3 to 6 touch points of seeing an advertisement in the digital ecosystem just specifically to transact, and it's never usually the first time, right? And by the way, that first time might be on Instagram, but the second time might be somewhere different on your CCTV or wherever it is that you might be seeing, that sort of thing.
How did the whole, ask app not to track thing that Apple put in place, how did that affect?
What did you say? Ask app.
Every time you get a new app, it says ask not to track.
Right. What does that mean?
It means that marketers can't track your.
Well, what the hell good are you then?
Well, right. But they, because some people didn't want to be tracked, but I'm of the thought that I like to be tracked because I want to be served ads that I like.
You're going to give us, what was that tequila company? You're going to give us that.
Yeah.
Versus the water company.
Yeah, look, there's this, I don't know, maybe a misconception. I get it. People want to control their data. They want to feel that they have control over privacy. So at the end of the day, a lot of that.
They don't.
A lot of that came from this place of people being concerned that their phone was listening to them, right? It was tracking them. Right? But at the end of the day...
Oh, look, Claude Zdanow calling me. You're here.
There's an ad for ONAR.
But like the idea is, it's not that like we know it's any individual person, right? It's the same reason when on a TV show you used to have all this data about how many homes and where were the homes.
We don't have Nielsen anymore. We don't have Arbitron anymore.
Yeah.
Do you know what it's about? It's about touch points.
Yeah.
Right. So you make it. That's a fantastic point. Arbitron used to give out diaries for radio listeners. Remember when the radio stations used to say,
oh, yeah,
25 past the hour, AM 600 Cocoa, all the time. So you kept on listening. What time? When you got your diary, and Greg can tell us better than anybody. When you got the diary, you knew AM 600 Cocoa, what time are you listening? Then they gave out personal people meters.
Ugh.
Basically, in all of San Diego, 3 million population, there's 120 total.
Yeah.
And statistically speaking, they say that's how they're doing it.
What a true cross section.
And by the way, when they compared what people were actually listening to their diaries, it was not even close.
Oh no.
So to your point, Arbitron tracks radio, Nielsen tracks television, but those are gone the way of the dodo, because now it comes down to what's called a CPM model, which means that, like for example, we're in 125 million TV homes, plus we're everywhere else. Our advertisers pay on the basis of the opportunity to watch, not necessarily who's watching. Now, NBC, ABC, CBS, totally different story. That's how you have to sell, though, isn't it?
A little bit, yeah. And then, well, it even gets more specific, right? So because most people say, I don't care, I want customized ads, I want things that actually I want, right? We're able to dial it down way more specifically. We can say men or women between the ages of this and this, located in this geography, right?
So you don't have to be tracked for that.
It can get very specific and granular,
yes,
right?
It can get incredibly specific. It can be based on terms, things you like, interactions,
and how long they've watched your video. I mean, you can dial.
Why does that matter, though?
Because you may see like the color, and then you look at it for 2 seconds, but then you bounce before the message has got across, right? So
yeah, so it's about data points, right? And the idea is you can kind of take these different data points and start to build cohorts of people that you want to advertise to back to, instead of just machine gunning, hoping somebody sees it and wants to buy your product. You can give the right advertisement to somebody who actually wants to buy your product at the right time.
Okay, hey, Jared, our Emmy Award-winning director, Jared Coleman. Jared, can you bring up once again the screen that showed their clientele on the big screen here? I have a question about that, because I saw some brands here like Paso Robles Winery and stuff like that. What I want to know is, so there you go. So you've got a number of brands, some pretty well known up there. Paso Robles Wine Country, for example. Do you dictate to them best practices in terms of who they should reach, or do they tell that to you, or how to describe sort of that relationship you have with clients?
Yeah, so Paso Robles Wine Alliance, basically call it a membership organization of all the top wineries, hospitality organizations in Paso, and they want to attract people that want to come visit Paso, right? And so we're targeting people within driving distance, so San Diego, LA, San Francisco, but also, for example, where is there a direct flight to San Luis Obispo County? So maybe we're targeting people in Dallas, right? Oh. Where are the other places that we're able to send advertisements to people that like wine, like hospitality, like good food, and then you're starting to drive. So that's what we're doing for them.
You also do income?
Yeah, you can, in certain cases, you can obviously, depending on the platform where you're running advertisements, yes.
How tight are you with the McAllen people?
Hey, so look over to IQST.
Yeah.
Okay. Different game. So talk about the metrics there versus that's a whole, because you guys have to create a new, you start over every time.
What is IQST? Sorry, I don't know.
It's a global telecom business.
It's a partnership.
They're also publicly traded. We have a unique partnership with them because we're both kind of growing public companies. And so we're very, very close with them. We've been involved with them with everything from, even before running an advertisement, how are they telling their story? Because they, not too dissimilar to us, have made a lot of acquisitions. They've bought a lot of different types of businesses, and they're trying to figure out how to communicate that to the world. Plus, they're an international business, so they have offices and team in Europe, the U.S., Central and South America. So for us, we are working with them as a holding company and their individual businesses to kind of build that story and make sure that advertisement gets to the right customer at the right place.
For 2025 looks pretty good for you guys. As much as you can talk to us and tell us, what are you looking most forward to for this year?
Look, I think for this year, I can talk about what we've announced already, right? We announced a pretty exciting partnership last week with Sam Nazarian's SBE. If you're familiar, they own the Mondrian Hotel, SLS Hotels. They sold to Accord for about $950 million few years ago, right? Big hotel group, restaurant group, very excited working with them. We also announced an acquisition recently, so it'll be the first. We've been talking about doing acquisitions for a year now. It'll be the first of hopefully many that we'll be talking about that are going to help create more scale and more size to our business, right?
The goals for the next 5 years is more acquisitions. I know you want to uplist to NASDAQ. So
Yeah. So the goal is to get the NASDAQ. We want to do that the old-fashioned way by having enough net income and a good business to do it. And so for us, we need scale to do that. And so we're buying businesses to create scale that we can, hopefully leverage as we go.
Mm-hmm. Will you come back here every day?
Every day.
I mean, I could ask you 100,000 questions.
All right,
buddy. Thank you so much for here. We're going to hear a lot more from him as we move here through the next few months. It's really, really interesting to talk about holding companies, especially in healthcare, but also in this sort of marketing strategy business, because
it's changing.
It changes every day for you.
Every day.
Yeah. Claude Zdanow, CEO, ONAR Holding Corporation. Of course, their ticker symbol ONAR. Please come back soon. We will be back soon. Keep it here. Much more Big Biz Show to come. Big Biz Show rolls on. We are inside the Loft 100 studios, and so lucky that those gentlemen you see right there on the screen, the Day Trader Trio, are with us every single day as well. Hope you're all having a good day. Thanks for being along for this crazy ride. Costa, Marybert Godwin, Greg Todoroff, and of course, our main man, Sully.
Is that Leonard? You playing Leonard Skinner?
Skinner!
Are you still? Is there a reason we're playing this one?
Yeah. Big reason.
What is that?
Big reason.
Well, because the gentleman, the founder of a company called Freebird Springwater, drinkfreebird.com. I started going back.
Oh, I see what you did there.
Yeah, look at that. Just kind of weaved it together.
Look at that.
But Jay Williams is the founder, and we were going back and forth on actually LinkedIn, and he was making reference to being a big rodeo guy, and I found it quite hysterical. And then I said, hey, what the hell? Let's learn about your company, Jay. And so he's decided to join us here on the Big Biz.
Well, Jay, being such a rodeo guy, is a bull rider, and the 19.2 ounces is because that was his bull ride. Couldn't get to 20, could you, pal? Quitter.
Jay, how are you, man? Thanks for the time.
I'm great. Thanks for having me.
Hey, so, okay. Freebird Southern Springwater, I got to tell you that I think the most brilliant thing about what you're doing, and I've seen this only one other place, is putting spring water in a can. And this solves a ton of problems. There's a taste issue and a taste profile that comes with drinking out of a can, but also there's this landfill thing. But talk about how you guys started. What is Freebird? How did it get going?
Yeah, absolutely. I had an intrigue about the water business and always thought that perhaps if I could come up with an idea that I thought was worthwhile, that I would pursue it further. And I literally had an epiphany in the middle of the night, 4 a.m, wrote it all down and tried to execute on the idea. And sort of the basis of that was spring water in an aluminum can, for both the sustainability component of it, as well as, of course, the marketing elements, which I think are pretty cool. And with the can, you obviously have a little bit of a different feel than a bottle. There's sort of a cool factor to it. It's something that's very appealing to folks if maybe they're out and not necessarily looking to drink alcohol or a beer or whatnot. They can put a Freebird in their hand and feel like they're fitting right in. And as it relates to the product itself, we were able to secure a exclusive with a wonderful, amazing spring in the Blue Ridge Mountains. Actually, the first time I ever tasted it, I literally drank it out of the ground. That's some trust right there, by the way.
Is that because it's called Vodka Springs? Was it?
Yeah. How did you know?
Because Greg and I found Tequila Springs. Yep. It is. We couldn't stop drinking it. It was amazing.
Right. And you're so happy now. Look at you.
So this is such a great job.
So Jay, who's your target audience? You mentioned putting it in a can at a bar, and I am not a drinker anymore. So I think I might be.
But it'll look like you're drinking a beer.
But it looks like it. But I mean, it sounds like I might be your target audience.
Yeah, absolutely. So I would say that it's sort of a multifaceted approach. First of all, exactly what you said. There's the current sort of environment where, younger folks in particular aren't drinking alcohol as much as they did before. So I think that gives us sort of an opportunity there. The sober curious is obviously a component of that, which, allows us to play into that audience for sure. And, having a can in your hand, rather than say, a bottled water of one of the big boys that I won't name, there's just a feel to it that I think some people resonate more with. And as far as the target audience, there's that audience, the sober curious or non-alcoholic drinkers. There's your blue collar guys. I mean, one of our components to everything about our marketing is everyday heroes. And, when I created the brand, I was thinking of sort of nostalgic Americana, small towns, blue collar, everyday heroes, soccer moms, tailgating at SEC football games or what have you. So, the target audience, I think, is really America, to put it frankly.
Jay Williams is the founder of Freebird Spring Water. Their website is drinkfreebird.com. Jay, what more or less is the tiebreaker? What sets you apart from everybody else?
Well, I think probably you start with the can. One of the inspirations for the brand was a brand called Liquid Death, which I'm sure you're probably familiar with. Mm-hmm. They've had a tremendous success story. In less than 6 years, they're worth over $1 billion. So, you can't argue with that. But what's happened in this category is they basically created a new category of very brand-centric beverage. In particular, water is what they started with. Now they've branched out into many other products, but their category is one that they absolutely own. And there really isn't a number two. I'm from Atlanta, so I'll talk about Coca-Cola. Coca-Cola, when they started, they owned their category. Until Pepsi came along, there really wasn't a legitimate number two player. And so we feel the same about this category, with Liquid Death effectively owning the category. While there are certainly other canned beverages out there, nobody has really threatened Liquid Death in any capacity. And we believe that, Liquid Death owns their audience, and they've done an absolutely amazing job of leaning into that niche. But there's a whole lot of people out there that would love to drink a beverage like Liquid Death, but maybe not necessarily Liquid Death people. And
it's really funny you say that, Jay, because when you had your Jerry Maguire moment, you thought our target audience is Merca. Right? And I will tell you, when I see Liquid Death, the first thing I thought was it's an energy drink.
Yep.
And I stayed away from it for years.
Same.
And the point is that as popular as they are, and of course, I believe it's for the same reason that pit bulls are popular with a certain organization. I think you're onto something here because look, nobody challenged Pabst Blue Ribbon until Miller came along. Seriously, if you think in terms of, and so it's not about originality, it's about better execution or different execution, or maybe understanding that one size does not fit all here. Is that a fair assessment?
That's a very fair assessment. I always say my mother would never drink a Liquid Death. I actually don't know that my mother knows what a Liquid Death is.
I won't drink it for that reason.
Right, and that's what I was going to say. And then my wife, who's not 80, also will not drink a Liquid Death because she just doesn't want to walk around with that in her hand. Same. Ours, on the other hand, is much more gender neutral, and it's about America. It's for you. That's the way I look at it.
Well, Jay, plus the other thing is, if you need plausible deniability, if you're mad at somebody, don't buy them a can of Liquid Death right before you whack them.
Right, exactly. Yeah, very good point.
Jay Williams is the founder of Freebird Spring Water. Drinkfreebird.com. Jay, please come back on the air with us.
Absolutely.
Thank you for your time. Speaking of time, we are out of it today. Thanks to everybody who makes the show possible.